We're back. I'm Don Wheeler.
And I'm Paul Howard. Welcome to this edition of North Point Mortgage Advocates.
How are you doing, buddy?
I'm doing great. How are you doing today, Don? Good to see you.
Good. We're going to do things a little bit different today.
Well,
first of all,
I'm kind of tired of doing things we've been doing.
I agree. First of all, let me make a point. I am tired of watching TV. I'm tired of I see a lot of people talking, but I don't see a clear message out there anywhere.
What are they talking about?
To be honest with you, I don't even know. They just, it's jabber this, jabber. You want to turn the TV off, and I think that's the best thing to do.
Yeah.
In the mortgage business, I see a lot of that going around too, but I think today will help with a little bit of clarity.
Absolutely.
So we're gonna ask our producer Scott to help us out today.
Great.
And
so we're going to talk about refinancing.
Yeah.
Right. Because as Don said, there's a lot of talk on TV and the media about interest rates and where they're headed, and they are headed down. So this has piqued everybody's interest. Well, should I refinance?
I like for people to, when the mindset out there is I have a mortgage loan. I like for people to look at it, it's not a mortgage loan, it's a financial instrument. And I like to help people find ways to use that instrument for the betterment of their family and their personal situation.
Absolutely.
And you see people as unique.
I do.
So I'll jump in here off camera, and I've got one big question for you guys. Can you explain to me, or explain to us all, why mortgage interest rates tend to be lower and how they compare to other debts? I mean, everybody's got credit cards. Some people have personal loans.
Sure.
How does this fit into, because I think that's a big point that
It is. So you want to?
I'll start it off. I'll start it. The why is simple. The mortgage is in most cases, a long 30-year term. That's a long time, all right? Mm-hmm. And we call that long-term debt. But most households have what we call short-term debt. That's your credit cards, that's your car loans, that's your furniture. And those are short terms and usually at a higher rate. Mm-hmm. All right. So it might not be as much money, but because it's shorter term and a higher rate, it's actually costing a lot more. All right. The long term, has so many advantages tied into it in the mortgage. So remember, while we're talking, look at it as a financial instrument. Now, with that short-term rate, what are we seeing as the problem right now?
Well, we're seeing the problem right now is people who've gotten all that debt. They have not changed.
Right.
Their lifestyles continue through this inflationary times. So people who have the short-term high-rate debt, as Don mentioned, the opportunity may be there to refinance, not only get your current mortgage rate down, but you can also pay off those debts. Okay, so one thing I try to tell my client base is try not to think so much about the interest rate. Mm-hmm. Think about, because at the end of the day, you're raising your family and you're paying your bills. You're paying them with dollars. It's dollars.
Yes.
So how many dollars do I got every single month to pay my debts or save money, that type of thing. So the interest rate, while it's important, it's not the main thing to really focus on. The main thing to focus on what's good for me in my situation, whether it's you by yourself or a big family.
We're going to continue these videos in an effort to help empower the consumer. And we've got a couple of tools here at the office we could use. Number one, within our system, we monitor all of our mortgages continuously. So if we see that something, and there's a matrix where it says it makes sense to look at a refinance. I'm just not saying we're going to do it, but it makes sense to look at it. All right? That's powerful. So we'll notify you and say, hey, we might want to have a conversation.
Sure.
All right. Sure. Now, we don't know what your personal situation is right there, but you'll know. And you may call us even before we call you. That's the first thing. The second thing is we have, simply what we call a blended calculator. All right. And so if you're kind of stretching a little bit on the credit card debt and the car loans, inflation's got you, buying a little, if everything's got everything kind of tight, it's probably worth a no-hassle call to us. Let us use our blended calculator to see if, we say, can we blend the rate and save you money, but more importantly, can we provide you with something that's going to actually put more dollars in your pocket each month?
Absolutely. I think the message I personally would like to get across to everybody now is let us just take a look, okay, and see what's going to work for you, because it's coming. The opportunity is going to be there for you to do something, whether it's just refinance your current rate, okay, or some consolidation, or it might be a time to, do home improvement, stuff like that. So, because one other piece of the pie that we haven't really touched on is now you have a lot of equity too.
Oh, yeah.
Home prices have gone up tremendously, so that you have room to do these type things. So, as Don said, it's a financial instrument that you should take advantage of.
Yeah. You go to the doctor when you need a physical checkup. Think about your mortgage and your other financiers. Call us. Let's do a financial checkup. There's no obligation. And you could find, like Paul was saying, we can help you put more dollars in your pocket.
There you go.
Thank you for joining us. We'll see you next time.
Talk to you later. Have a great day.